This video will focus on the cash flows from investing and financing activities, or Step 2, as well as Step 3. In Step 2, we need to analyze changes in non-current or long-term assets, liabilities, and stockholders' equity accounts, and record them as either investing or financing activities, or disclose it as a significant non-cash transaction. We've already analyzed computer services, and we've determined that the changes in the property, plant, and equipment accounts are investing activities. We've also determined the changes in long-term liabilities as well as stockholders' equity are also financing activities. When you look at the changes in these account balances, it's really important that you also use the additional information to help explain the change. For the investing activities section, look at changes in long-term assets, such as land, building, and equipment. Computer Services purchased land for $110,000 by exchanging bonds. The exchange of bonds for land has no effect on cash, but it is a significant non-cash investing and financing activity that needs to be disclosed. The equipment account increased $17,000. The additional information explains that there was a net increase that resulted from two transactions. One, we purchased equipment for $25,000, and we also sold equipment for $4,000. These transactions are both investing activities. The company should report each transaction separately. So it would report the purchase of equipment as an outflow of cash for $25,000 and the sale of the equipment as an inflow for $4,000. Lastly, the company purchased a building for $120,000, and we would show that as a cash outflow. For the financing activities section, look for changes in long-term liabilities and stockholders' equity accounts. We know that the company acquired land by exchanging bonds, and we've already identified this as a non-cash transaction. We also know that common stock increased by $20,000, and if we look to the additional information section, we know that they issued additional shares of stock. So again, we're going to show that as a cash inflow. We also know that retained earnings increased by $116,000 during the year. The increase can be explained by two factors. We had net income of $145,000 and dividends of $29,000. Payments of the dividends is a cash outflow that the company reports as a financing activity. Then the last thing I just want to conclude is that when we are preparing that investing and financing activity section, positive numbers indicate cash inflows, whereas a negative number indicates a cash outflow or a payment. Right, so here's a partial statement, and again, the focus is on the investing and financing activities, and you can see the purchase of the building and the equipment are negative or outflows, whereas the sale or the proceeds from the selling of their equipment is an inflow or it's a positive number. Issuing common stock, again, that's showing as a positive number because it's an inflow, whereas the payment of cash dividends, we're going to show that as a negative number, which represents an outflow. And then the last thing I just want to mention is you can see that non-cash, that significant non-cash investing and financing activity. Again, it's not part of the body of the statement of cash flow, but rather we're going to disclose that at the bottom or in a separate note. The statement of cash flows for computer services reports the cash receipts and cash payments from operating, investing, and financing activities during a period. Again, if we look at this statement, we can see that this company generated $172,000 from its operating activities. We also can see that they used $141,000 to invest in equipment and building. And then we also can see that they used $9,000 in financing activities. Again, if you add the sum of the net cash provided by operating, investing, and financing, they will equal that net increase of $22,000. If you add that to the cash at the beginning of the period, you'll arrive at the cash at the end of the period. The last step is we want to compare the change in cash on the statement of cash flows with the change in the cash account reported on the balance sheet to make sure the two amounts agree. The net change in cash during the period was an increase of $22,000, and as you can see, this agrees with the change in cash that was reported on the balance sheet. All right, so now it's time for you to start preparing the statement of cash flows. Again, our focus is on the indirect method. Before you start preparing this financial statement, I do want to review some preliminary steps. All right, when you are preparing the statement of cash flows, the first thing I want you to do is determine the change in each balance sheet account and identify that as operating, investing, or financing. I want you to follow the following general rule. Operating activities are going to involve income statement items such as net income and depreciation, and you're also going to look for those non-cash changes that occur in current assets and current liabilities, such as accounts receivable, inventories, accounts payable, and wages payable. When it comes to the investing activities, I want you to look for changes in the investment and long-term asset accounts, such as property, plant, and equipment. And finally, when it comes to the financing activities, I want you to look for changes in long-term liabilities as well as in stockholders' equity accounts. Again, just keep in mind when it comes to retained earnings is going to increase for net income and decrease for dividends. Net income is included in our operating activities. The payment of dividends is a financing activity. All right, so the first step is to determine the change in each balance sheet account. Right. The second thing I want you to do is to classify each change as relating to operating, investing, or financing. All right, so let's focus on accounts receivable. Again, accounts receivable and inventory are operating. Land and equipment are investing. That change that occurs in accumulated depreciation, in this case, there was no equipment was sold, so we know that that change is actually depreciation expense. Again, you're just going to have to be careful. If we sell a product or sell equipment, then that change will not be depreciation expense because you're going to have that removal of accumulated depreciation. All right, accounts payable, operating, bonds payable, financing. The change that occurs in common stock is financing, and retained earnings, I want you to think of this as mixed. It contains both operating and a financing component. Again, if we take our beginning balance of retained earnings of $138,000, if we increase that for net income, again, additional information line number 1. If we subtract that for cash dividends, number 3, we'll arrive at an ending balance of $192,000. Net income is included in our operating section, whereas the payment of dividends is considered a financing activity. All right, the last thing I want to mention, again, step 1 and 2 we just did. Step 3, again, we know the change in cash is $41,000. We know the beginning balance was $22,000, and we know the ending balance was $63,000. All right, when you're preparing the statement of cash flows, I do want you to begin with the end in mind. What does that mean? Well, you know what the increase in cash is. You also know what the beginning balance was, and you also know the ending balance. So what you don't know is how much cash was provided by or used in operating, investing, and financing activities. All right, so let's real quickly summarize the 3 steps, and the solutions to this statement of cash flows will be provided in the next video. But before we get to that, let's talk about those steps. Again, step 1, again, we're focusing on the operating section. Again, you're going to start with net income, and we have 3 adjustments, right? We're going to add any non-cash charges such as depreciation. If we sold any property, plant, and equipment, we're going to add losses and subtract any gains. And then finally, that last one is you're going to look at the change that occurs in either non-cash current assets or current liabilities and either add or subtract that to net income. And step 1 is focused on operating activities section. Step 2 is focusing on our investing and our financing activities. Right, these are going to be the change that occurs in our non-current assets, liabilities, and stockholders' equity account. I want you to go back and identify those changes that were an I, and you're going to incorporate them in the investing section. If you identified that change as an F, you're going to incorporate that change in the financing section. Just keep in mind, you always want to look at that additional information to help determine what changes occurred. And then that last step, step 3, again, the increase, the beginning balance, and the ending balance are all coming from the balance sheet. Again, that's that first line item. All right, so this problem is just designed to give you additional practice on preparing the statement of cash flows using the indirect method. All right, when you prepare the statement of cash flows, I hope the first thing that you do is determine the change in each balance sheet account. And again, if we focus on that first line item, we know that the change in cash, there was an increase of $4,000. We know the beginning balance was $33,000, and we know the ending balance was $37,000. Right, so we know step 3. Right, so let's focus on step 1 and 2. Step 1 and 2, I want you to simply identify the change as whether it's operating, investing, or financing. Again, accounts receivable, inventories, prepaid expenses are operating. Investments and plant assets are going to be investments. Accumulated depreciation, in this instance, it's operating. Accounts payable, operating. Accrued expenses are operating. Bonds payable. Financing, common stock, financing. Retained earnings is considered both operating and financing. Net income is an operating activity. The payment of dividends is a financing activity. Right, the solutions to this exercise or this problem will be provided on the next video.